So Bitcoin stocks rallies even when Ethereum is going down. This is happening right now on the stock market on a Friday as we speak, okay? So you can see that Bitmine is about up 1.5%. It was even up like, I think, 7 or 8% today, but it's dropped a little bit and it's up 1.5%. So if you're seeing this kind of price, you're thinking like Ethereum must be like, maybe break even or 0.23% up. But no, Ethereum is actually quite down this morning. Okay, so almost 3% down this morning. So in this video, we will talk all about it. So make sure to stay tuned.
Welcome to the game. I'm the wolf of Dubai.
So, if you don't know who I am, my name is Danny and I'm the most watched stock market YouTuber from the Middle East, and I also early on stocks that can go 10x, 20x, 30x from here. I was talking about Tesla when it was a $17 stock, and my subscribers bought even apartments or houses in the US. So my next extend stock and your next real estate purchase should be on me if you're following me. So don't follow me only on my main channel, but also here on my second channel. Okay, so let's dive in the phenomena of Bitmine going actually not always in the same direction as Bitmine shares and so on. So usually the quite natural way to do that is obviously when Ethereum goes up, Bitmine follows. Okay, very simple logic. Okay, they buying Ethereum. If Ethereum, the treasury goes up, obviously the stock price goes up because the company gets more value. Okay, that's very simple. But why is that? That actually it's not the case today, or not always the case, right? In that specific phase, I think it's something that in this kind of day like today, and this was recorded yesterday on Friday, you see something that the demand for stock of Bitmine is much bigger than the traditional connection between those two assets. Okay, and that has something to do with, for example, the Fed meeting that we had this week. As you remember, we are very bullish, okay? Look at this clip of Tom Lee that explaining what he believes happens after the Fed decision and what actually he thinks for the overall market. Have a look.
Guest. Tom Lee of Fundstrat is with us. Tom, welcome. You can comment on all those moves or anything else if you'd like, but also I want you to comment on something that hedge fund billionaire David Tepper said on Squawk Box this morning. Listen.
I don't think another ease matters, as far as being too easy. It's going to be a little bit restrictive. Or if they do too. Beyond that, it's going to be a little tricky, I think, because you got to be careful not to make things too hot to have the other side of the mountain, which was really freaking ugly, in 2000, 2001, etc.
All right, so let's bring in Tom Lee, not the drummer. Tom, what do you make? I mean, how much does the Fed really matter to the equity markets right now?
The Fed still matters a lot because they are the most powerful institution in the world. And it matters because monetary policy relatively tight has kept the ISM below 50 for 31 months. And so corporate America has operated with a bit of caution, keeping the car in low gear because they didn't know where inflation was going to be, and they didn't know where monetary policy was. So I think when the Fed begins to ease, it's not just a move in interest rates, but it's a green light for corporations to get more confident. And as you know, the ISM moving above 50 does not only revive economic activity, it probably also rejuvenates the labor market, which has been sluggish for what looks like more than 12 months.
So does that mean if the Fed stays dovish or keeps cutting, that there's other newer legs to this pretty remarkable stock rally?
Yes, and I might even say that I think that we could have growth recover without inflationary pressures. I think reflexively, people the last few years think growth picking up means there's automatic inflation. That has not been the case for 25 years. But I think if companies begin to expand, plus the fact that we know AI is driving productivity gains, and that's really a big tailwind for businesses. And then we know that there's initiatives around Wall Street boosting productivity because they're going to build on the blockchain. I think there's a path for growth to be stronger next year without a pickup in inflation. That's going to be very good for profits and for equities.
Yeah, and listen, we've talked about it many times, Tom, and I know you've talked about it with Scott and others as well. You've been long, you've been strong, you've been Correct. But is there, at some point, does this market take a breather? It's getting, listen, as a 401k holder, I like it. But as a TV analyst who's been doing this for almost 30 years, I'm starting to worry about it a little bit.
Yes, I mean, a pullback is going to be inevitable. But from a timing perspective, sentiment still remains staunchly negative. So, I think that the gold standard is the AAII net bulls less bears. That's been 6 consecutive weeks where it's negative. That's never really marked a market top. I mean, that has to flip positive and sustain for several weeks. So I think if we're going to say between now and year end, could the market pull back? I'd say it's possible, but to me, it's probably from higher levels. I think there was a lot of skepticism about even yesterday's FOMC. I had a lot of clients tell us they thought the stock market would sell off because 25 was priced in. But because almost everyone told me that, that was the consensus view. I think people were cautious into yesterday. And that's why we're seeing the groups that should rally big, like the small caps and the cryptos and the financials and even the Mag 7.
We might even get a record high for the Russell 2000, about, 75, 80 minutes left to go. We'll see what happens.
So as you can see, he's quite bullish, right? After the Fed cut. And before we diving into the next clip, check out xtendaytrading.com if you want us to trade for you all automatically with our software AutoPilot that we created by our own. There's nothing else out there. We trade US stock market options directly into your portfolio. So make sure to schedule a call with me personally if you have $10,000 or more on xtendaytrading.com. Now, let's talk about those kind of situations where actually we had the all-time high and the Fed is cutting in this environment. Well, we had 20 instances and 20 instances where the stock market went even higher. Okay, so, but I'm not telling this. This is actually Tom Lee. So have a look into the second clip.
Good evening, FS Insight family and community. Today is Thursday, September 18th, and this is our Macro Minute. We're largely through the key catalysts for September. As you know, we talked about how consensus thought September would be a down month, but we had the non-consensus view that September would be up. And then we had the August jobs report and August CPI, and both were positive for markets because they were ultimately interpreted as dovish. And yesterday we had the FOMC rate decision, and it was a dovish cut. The Fed cut 25 basis points, but he had a dovish explanation and really talked about how the risks have shifted towards the job market. Now, this is what we expected. As you know, we sent out an alert on Wednesday before the FOMC rate decision, and our take was that stocks were hesitant into that decision. That's because I think investors were thinking stocks would be down, but our take was that we would ultimately rally post FOMC decision. And that's what's happened because on today, which is Thursday, not only was the S&P up, but it was led by the NASDAQ up 1% and small caps up 2.5%. And more importantly, I think there will continue to be follow through. This is shared from Carson Research, but they show that whenever the Fed cut near all-time highs, markets had 12-month gains 100% of the time. So I think it's a bullish cut. And again, we're in an easing cycle. But we come back to the question of what will outperform post-Fed.
So as you can see, Tom Lee is saying, well, we have those instances, so there's a lot of demand for Bitmine shares, much bigger than that's kind of, desire to sell Bitmine. And there's one more thing that I have seen, which is quite interesting that I have to share with you right now. Because when you go on the X website of Bitmine, you see they shared like a couple of things, and then they're sharing that the usage of Ethereum is close to all-time highs. But then there's one guy, Amit is investing, one of my YouTube colleagues here on YouTube, and he said like how he is invested in Bitmine and so on and so forth. But then there's something quite interesting. There was a tweet right below it by Anand, and he said BMNR must be raking it in right now around around 1.5 and now with huge volume, 50 plus per day, the next Ethereum purchase is gonna be nuts, okay? That means that actually they having so much trading volume that he believes that he is buying, will be buying a lot of Ethereum in the next, 9 days or so. I remember that per week, we are buying around like $1 billion worth of Ethereum. This is, by a statement of Tom Lee, which was quite interesting. So I think that this is something that is, interesting to understand. And I love to go deeper in those comments. This video takes a lot of research. So make sure to subscribe not only to this channel, my second channel, but also to my main channel to not miss both 2 videos on Bitmine every single day, guys. Okay. So with that said, I would love to also know since when you are watching me. Okay. Let me know in the comments below how many stocks of Bitmine you own and where you are watching from. These 3 things, let me know in the comments. And I see you obviously tomorrow for a brand new video. And don't forget, the grass is greener on the other side.